You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. If we sound a wee bit different, it's because we're not in our studio in Chicago, which is quite sunny these days, but no, we're actually in scenic and sunny Florida for the Options Industry Conference. And it's a great event. It allows us a chance to catch up with a broad cross-section of the industry, including our next guest, who, old friend of the network, even though he hasn't been on in quite some time. He is Chris Larkin, the Senior Vice President of Trader Product over there at E-Trade. Chris, welcome back to the show.
Thanks for having me back. I'm really excited to be here.
Well, Chris, it's pretty much been about 5 years, I think, since your last appearance on the program. You've been up to a bunch of different stuff, I'm sure, before making your way back to E-Trade. So catch us up. What have you been doing since the last time you and I chatted?
Well, I've definitely been staying busy. I took a little hiatus from the options business, and I spent the last 5 years building out the fixed income sales and trading desk for a leading financial firm, and also ran their corporate services business as well. So that was a nice challenge for me, but I had an opportunity to come back to E-Trade via the transaction with Options House. The person who used to run our organization, Michael Curcio, was the CEO of Options House and is operating as the president of E-Trade. And so had an opportunity to come back to work with him and some of the team members from the past. So I'm really excited about some of the things that we're doing here today, especially with the acquisition that we made last year.
Speaking of that acquisition, it's been a while. I think it was at this conference last year, the last time I checked in with Michael and Joe talking about and they were pretty optimistic at the time for the integration and how fast it would go. I know from experience and seeing a lot of these go down that they usually take a lot longer than, and they're much more fraught with peril and difficulty than most people assume when they first start. So how has that process gone, the merging of the Options House and the E-Trade platforms?
It's gone great. I think there's really two phases when you go through an acquisition. Number one is you have the conversion. So you're just converting the accounts over to E-Trade, and so they get on your books and records, and you get clients that can log in on day one. That's number one. The second phase is the integration of the clients, and that's really about getting used to the client experience. So as they come on board, getting to use our platforms, whether it be a trading platform, mobile platforms, our website, making sure that we're working with them to make sure they're comfortable with everything that we have. And so there's really two phases, and they've gone fantastic. It's always a few months to get them used to it, but they've really kind of settled in, and we've been able to take the best of both worlds to create a good experience, not just for the Options House customers, because they got a whole bunch of products and services that they never had access to, but also for the E-Trade clients to really sort of accelerate our option capabilities at the firm. They get a whole suite of tools and services now and expertise from the folks that we acquired from the Options House family.
And is the process complete? Is the integration complete?
It's almost complete. I mean, I think there's a few things that we're trying to build out on our platform. So what we do is we've got a couple platforms. Like, for instance, Flex was the platform that was used at Options House. It was built on old technology, basically flash technology, which is going away.
Yes.
And so we had to rebuild. It had to be rebuilt no matter what. So we've rebuilt that from the ground up. And I think we've got about 1 to 2 things left, but we're going to be retiring that platform on June 1st of this year. So we've got to kind of clean up the offering But the good thing, again, is they're going to have all the functionality that they've ever had on the Flex platform, plus an additional some enhancements that we've added to it. So it's a win-win for all of those Options House customers.
I'm curious for you, how personally gratifying must it be for you to come back to the firm now? Because the last time we spoke, options were an interest to E-Trade, but they clearly weren't a focus. You had a lot of other things going on at a big firm. Now you come back, they have the merger with Options House. Options are clearly a focus going forward. There are a lot of options-oriented people at the firm. What's it like to come back to the firm with this kind of newfound focus on options?
Well, it's great. I think there's a lot of energy. I mean, we had a lot of success in the options. When I was over there, we took it from 3% of our business, and right before I left, it was around 22% of our overall business in options. So we've done a great job. But to get it to the next level, there was quite a bit of work we had to do. And then what you do is you bring on the Options House acquisition, and now we set our record last quarter for the percentage of our DARTs that were in options, and we're running in the low 30s% of our DARTs that are there. So the capabilities that we picked up by this was a huge win for us. And so the things that we thought that we had as a gap several years ago when we were trying to build out, we automatically just picked up. So that's a big win.
Have you seen a good response, a good pickup from the, shall we say, the legacy E-Trade clientele who maybe had some options interest or wherewithal, but now they see all this new functionality coming to them and all this new, like you mentioned, this new platform experience coming from Options House? Have you seen a big adoption from them and moving not just from stock, but picking up into options and doing, let's say, basic covered calls and then kind of progressing from there?
Yeah, I think that I think the one great thing, I shouldn't say the one of the many great things that Options House brings within their actual platform, it's the education way that they build things out. And so if you think about it, it's through visualization of how we make it easier for our clients to do things, overall. And I think that's as we teach people about options and then we show them how to do it on the platform. That is the type of things that we can increase our adoption. So a typical example I'll give you on the idea of sort of embedding education into a tool. We just launched a new charting functionality on the platform. And what happens is it's an advanced charting platform, and you can draw your technical studies if you want. So if you're a person that's a junkie, you can. But with the new platform, we'll actually draw and identify patterns for you. So it's got pattern recognition. It will draw it for you so you can understand how they identify that, and then it'll give you a viewpoint of where they think the stock may go in the future. So that's a good way for clients, and they can turn that on and off, but it's a good way to teach people about things like technical analysis, and we'll embed that. And another perfect example, I think, is that one of the things that clients get confused on is the Greeks. And we do an education session on how to demystify the Greeks, but what we've also done within the platform is we've gotten rid of the Greek, that we try not to use the Greek terminology, and we just put it in plain words of what does this mean? Like, as the stock moves $1, this is what's going to happen to your option position. That helps people to adopt it because it's to get to understand options as a new person to that product, it's difficult, but once you learn it, I think people get to understand the versatility of it.
It's quite literally Greek, which is intimidating
Exactly.
to a lot of people. But you're right. This is kind of a push. We've been talking to a lot of brokers here at the conference, and this is, I think, a push kind of industry-wide to maybe to lower that barrier to entry out there, because it is an intimidating product, and particularly in this environment, we see volatility and things like that. People are concerned. They want to maybe embrace the product. So doing simple things like that, I've been a big fan for a long time of trying to get rid of some of the archaic nomenclature we throw around here all the time, iron condor, these things that are just intimidating. Their origins are born in the primordial ooze of the space. I've had 1,000 debates with people about what the heck front spread and back spread even means. I've had 1,000 different definitions. So some of these terminology, I think we probably could move away from on these as an industry, and it wouldn't hurt us at all here. And anyway, so I'm glad to see that you guys are embracing that simplification trend over there as well. You mentioned the mobile. It is kind of fascinating to me talking to the different firms just how much, if you had said, 10 years ago, all the functionality that would be available on mobile today, and the lion's share of your trading could be done on a device in your hand now. It's pretty amazing. Is this, obviously with the charting, that's a big push for you guys at E-Trade and Options House. Are you seeing a much greater penetration from the mobile these days? Are you seeing is it a substantial, is it even a majority of the trades going up on the mobile platform these days over there?
Yeah, it's about 25% of our trades, and it continues to grow. But the mobile devices, outside of just placing a trade, astonishingly, it generates about 45% of our logins in a given day comes from a mobile device. and that is really growing. So you're getting to the point where we're not to actually cross over that we're going to, and we talked about this 5 to 7 years ago, where we felt and looked out in the future saying, here's where we can see it, where people are going to be logging in more through a mobile platform than they will in a typical desktop. And we're seeing that today, and I think, as you see it, investors are demanding more and more things that they can do on their actual device. So we continue to invest on that side. I think a good example would be we've got a live action tool that is like a screener to identify opportunities in the equity and the option market. We just launched that on our Options House mobile platform a few weeks ago. So you can just go in there, quickly identify new opportunities. So these are the things that we're putting on there. Another interesting one is you can now trade futures, from a ladder on a mobile device. So the technology has gotten so much better. It's pretty amazing what you're seeing, and I think the younger generations that continue to come in and be part of the online financial services model, that it's going to continue to grow, and you're going to see it at 75% of our business is going to come through a mobile device.
There's a whole audience that they only want to interact through the mobile. The desktop is a legacy. What does Steve Jobs call it? A truck. It's the old truck model compared to the mobile. I did see the futures ladders on mobile, by the way. It is kind of interesting. Again, going back to amazing what you could do on mobile. It's also kind of interesting too when we get to that inflection point in the industry when the vast majority of brokers are doing the vast majority of their volume on mobile, which is coming, whether it's 3 years, 5 years, 10 years, somewhere in that time frame. It will be interesting to see what the impact is on the space. If people will maybe start migrating towards more basic strategies because they're easier to execute, let's say, sell a call than it is to do an iron condor swap on the mobile. Even I know these platforms are pretty functional, but still it's a lot of legs to execute on a mobile device. So I wonder if going forward, if that will maybe change some of the industry as well in terms of, we talked about simplification, if that will maybe also reinforce that trend where people will just, if their primary device is 4 or 5 inches on a screen and that's it, maybe that will change the way they view options to some degree, which is, no one's really talked about that. I'm kind of curious, maybe that's a discussion you guys are having down the road over there at E-Trade, but it will be curious to see how that impacts, customer use of options going forward, the device that they actually use.
Yeah, I think the interesting thing is, we've got a new group called E-Trade Labs, and we're looking at sort of the new technologies that are out there today. And I think, a really good example of that would be, how do we utilize voice technology where people can actually just talk into a phone and tell them what they want to do. So instead of tapping around and trying to build a strategy, just tell the phone and saying, this is the kind of trade I want to put on. And that, I think, is going to be the new way that people are going to start utilizing this technology. And so I think there's more opportunity that if we can get things where people can do things in sort of simplistic terms like we talked about before, and they can do it from a voice perspective, I think that could actually be a catalyst for the business. So those are the types of things we don't know where it's going to go yet, but we spend a lot of time thinking through and identifying, how these technologies are going to impact us in the years to come.
And one of the big pushes we're seeing from a lot of brokers in the space these days too is to ramp up their community offerings. They want people to come in. You mentioned people are logging in from mobile 40% of the day. They want people to come in and spend time, on their platform, whether it's, listening to content, reading content, viewing, whatever it may be, interacting with a chat room or some sort of interaction that keeps them on your platform, keeps them logged in, keeps them thinking about trading, talking about trading, and in turn, generating darts as they're doing that. Is that a focus for E-Trade going forward?
Yeah, I think it's important. There's some things we've got to do on that side. I think if you look at sort of like, way back when, people generally, relied on things like Consumer Reports to say, do I want to buy something or not? But you see, no matter where you kind of go, if you're going to go out, and whether it be Amazon or you want to go to Best Buy and you're looking to buy a product, people want to know who are the ones that have actually purchased the product. Tell me about your experience with it. And so whether it's a restaurant or a product, that people trust what other people are saying from that side. And I think it's a natural bridge for investors to do the same. Teach them how to do certain things. There's more of a trust factor, I think, when you start getting into people that are like yourselves and identifying, hey, how are you successful investing? How do I do it? Instead of having, sometimes have a professional tell them what to do.
There's a lot of things that are top of mind at a conference like this, and one of them has been liquidity. I got a lot of headlines, I think, recently. The Journal and others have been talking about it in the options space. We asked our audience before we came down here to the conference, we said, what do you think should be top of mind? What should be the top of our agenda when we're talking to people at the conference? We gave them a bunch of different choices. And options liquidity issues, I'm looking at the results right now, it's about a day and a half left to go, and it's still about 45%. So it's still dominating the trade. It's even beating crypto options, which is saying something these days. if anything can beat crypto in any sort of event, then it's dominating the headlines. But I'm curious for you guys, as you're out there on the front lines interacting with the retail day in, day out, is this a concern that they're relating to you? Is this something you guys are concerned about? We see the data here at a conference like this, 19, 20 names do half of the business, and the rest falls off dramatically once you get beyond that. Is this a concern for you? You've been around the space for a while. Then also, if so, what do you think we could do as an industry to maybe reverse that trend, get it up to 50 or 100 names doing half the business?
Well, I would say this. I think, definitely I'm concerned about sort of the liquidity issues that are in the marketplace. I think that you got to look at it in two different ways. And so number one is our clients generally trade the more liquid names that are out there. So I would say it's a little bit less of a direct impact to our clients today. Like the retail clients are generally trading those top 50 to 80 names, and the liquidity is pretty solid in those particular products. To be successful in this industry, though, I think we all want to be able to have a much more broad base. There's 4,500 names or whatever that's out there today, and we want our clients to have greater choice, and so we want them to trade more than just those top 80 names. And if you start going beyond that, liquidity definitely becomes an issue. And if you look at some of the spreads in some of these options that are out there, it's a problem. And I think that the other thing that I would say is, that we have to watch is the number of exchanges that are continue to come up. The cost of entry for a market maker today is pretty high, and it's an extremely low cost of entry for an exchange that exists today to just open a new one. And so this makes it very difficult for smaller market makers to make money out there. And so more participants obviously is much better. And so they've got to find a better balance, in my opinion, to find out how do we make it more cost effective for the market makers to enter in there and participate. And I think it's a challenge when you've got to connect to 16 exchanges. It's almost impossible to get started unless you've got a lot of scale. So they're talking about it right now. I think there's a session right now on liquidity. It is by far the most talked about topic since I've been down here, and it's been a topic that's talked about for a little while, but it's not getting better. And I know that there's also been some concerns with volume going into the auctions, and so as you enter into the auctions, you're not getting that liquidity that you're seeing on the screen, and that can scare away investors as well.
That's a pretty divisive issue. We've been talking about that with a lot of people here as well. Auctions. Seems like there's two disparate camps on this. Some people think they were a great idea to help kind of protect market makers, and they're doing that job. They don't have to show their best hand when they're quoting. Others are saying, yeah, but that's a terrible thing. The spreads are too wide as a result, and that's our advertisement to the industry or to the world, and it's a bad ad right now. So I'm curious. I can probably get kind of into it where you stand on this from your comments there, but what are your thoughts on auctions? Are they damaging liquidity as a result, and what can we do to maybe reverse that trend?
Yeah, again, I think it's a two-sided coin. I think one is the auctions have clearly been a benefit for retail investors where they're getting the price improvement on those particular securities. But when you think about price improvement, if you're looking at a potentially an artificially wide spread that's in there, it's like how much price improvement are they really getting? So to me, it's like I think the business when it comes to liquidity and having really tight markets, that attracts players that are there. And so they've got to find a better balance of how they're going to use auctions and how they're going to actually incentivize people to put prices out there in the marketplace. Again, not an easy topic to solve right now, and it's hard to kind of back off what's been happening in the auctions, but it's something that everybody's thinking about of how do we improve the liquidity. That's one area they're trying to find is how do we get more live prices on the screen.
It's interesting as on the one hand, I mentioned our audience was they complaining about liquidity. They want us to talk about liquidity issues at the conference. The number 2 choice they picked with 34% is after hours for options. So on the one hand, there's not enough liquidity intraday, which is an issue, but now they want to create a second session, which I think everyone probably would admit would be less than liquid. But still, we get this request a lot, particularly this time of year, earnings season. Everyone, they buy a call on Apple or Google or Facebook, pick your poison. Moves up 100 handles in the after hours, right? Then it opens up unch the next day, and people get angry. They say, I can trade the stock. Why can't I sell my call out? So they inevitably email us. I don't know why. They should email you guys. They probably do. And say, hey, how come I can't do this? But I'm curious. You must get this request a lot, particularly on this time of year. But what do you guys think about some sort of after hours liquidity? Maybe it's a everything? Maybe it's a limited pilot around earnings and certain names or RFQ or something along those lines. But what do you think about something in the after hours realm? Is that a viable thing, or is that a complete non-starter right now?
No, I mean, I would say broadly for after hours, we're obviously a big believer. There's no reason why, today that we need to have a market that's open from 9:30 to 4 p.m. each day. There's a lot of news that's going on, after hours and throughout the night. We just launched our 24/5 trading for ETFs recently. That'll take some time to catch on, but the market should be open 24 hours. I think the key is that if market makers are not incentivized during the primary hours, how incentivized are they going to be in the after hours? So it really becomes, at that point in time, buyer beware to execute in that particular market. I do see that if they're going to do it, they can go back for the top maybe 10 names that are extremely liquid that people might want to participate. Makes a lot of sense. So if they can do some things from the broad-based ETFs that are out there, maybe the ones that kind of replicate the ones that we've put in for after hours, so they can respond to economic news. I think it can be done. It's the individual names I think that will become a really big challenge, because the liquidity is only going to happen during the earnings season, or if there's an event. Outside of that, no one's going to sit around there and wait for a particular order. Yeah, it'd be kind of hard to have a 24/7 with Google after hours, but maybe around the earnings, there certainly would be interest that earnings evening, So maybe finding some way to replicate that on scale. I don't know. That's a challenge, particularly when intraday liquidity is already having issues. But still, it's a persistent drumbeat that seems to come up a lot, and so and our audience clearly wants it. So whether they know what they want or not, I don't know. But it's an interesting idea, and maybe one whose time has come in some capacity or other. Well, Chris, it's great. Could I get a chance to catch up with you over there? I'm glad to see things are going well with the integration over there at Options House. But before we go, maybe there's a topic we didn't hit on, or perhaps you want to leave our listeners with a little bit of a hint, a little bit of a tease of what's coming down the pike from you guys over there at E-Trade. Now is the time, sir. The floor is yours. Yeah, well, I would say right now, the investors right now are dealing with a different market. Last year we had a really low volatility environment. We're now into a much higher volatility environment. So their behavior is changing. They're being a lot more active. And whether you're a buy and hold investor or you're a trader, you really got to understand sort of the risk management as it comes down to that. So I think we're building a lot of tools and functionality to help clients identify and manage risk in their portfolios. So, I think a good example of something that's going to be coming out to all of our customers is our new risk analysis tool. And what it does is it takes your entire portfolio and breaks it down stock by stock and option position by option position. And it can tell you what will happen if the market moves down 1%, 2%, 3%, large move, that's in like the small move environment, or a large move. So I can look at my portfolio and understand from a dollar standpoint how much risk I'm taking in the marketplace. So people can look at that and say, am I comfortable with that or not? So whether you're looking at your own portfolio or you're trying to identify a new trade, it's all about risk management. And when you look at the volatility that's happening today, because we're in a new environment, people are better understanding or thinking about that now. When before, with the low volatility environment, they were just putting on trades and not really thinking about volatility because it wasn't a concern. So that's going to be our sort of primary focus over the next 12 months. Yeah, it's true. I've said to some of our guests here that it has been the return of volatility with gusto has definitely changed the tone of this conference. Last year it was a pretty, I'm not sure if you were here, but it was a pretty dire event. Volatility was not existent. Volume was kind of circling the drain there. This year, volume's back with gusto. Volatility is back with gusto, and seems like there's a little bit more spring in the step of the conference this year, which is fun to see. I would say, I think clients are active. I think they're enjoying the volatility. And the movement in the marketplace. I think the market makers are happy to see some of that. So it's good to get more participants in the marketplace. Volatility draws out more than we typically would see. Well, Chris, I'm glad to get you back on and hear all these things going on over there at E-Trade, and look forward to seeing how they play out in the marketplace in the coming months. I promise you won't be 5 years next time. Okay. Maybe 2. Thanks, Mark. Take care. Take care.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/the The Options Insider or via questions@theoptionsinsider.com.